All right. Good morning again, everyone. So it is the 12th of May, Thursday morning here. What we'll be looking at today again will be the dollar index. We saw a big move on the dollar index late last night with the trading session. I'll do a bit of a analysis on that move together with the S&P 500, but the main focus for today will be the dollar yen, the euro yen, the pound yen, and gold. So if you are watching us here on YouTube, then make sure you check out your charts before you jump into any trades, just because this is uploaded later onto YouTube. This is a live session for Traders Club members. So if you haven't already, make sure you check out the links, check out the comments for the way to join into the Traders Club, just so that you can watch this or join the call live and ask your questions in the chat. With that said, first up, any information shared in this video is not intended to be a trade recommendation. It is solely the view and opinion of myself, so please remember to do your own analysis prior to entering any trades. Right, so what has been happening in the markets? I'll show you here on the news, on the Forex factory, just last night. So before we get into what could happen, just last night, we had the US CPI number month on month. It was a 1.2%, expected a small increase at 0.2, a small change at 0.2, but what actually came out was a 0.3, with the core CPI month on month from a 0.3 expected, a 0.4 change came out at 0.6. So what this all means is we were expecting CPI to slow down, the growth or the increase in CPI to slow down, just because of how the FOMC has been increasing rates, the actions they're taking to try and stem this growth or this increase in CPI. But what we're actually seeing is that it is still increasing more than expected. And actually, in terms of the core CPI, and bear in mind again, core CPI is excluding food and energy. Core CPI has actually doubled in terms of growth from the previous month. So CPI in the US, or inflation data in the US, is still running hot. It's still running hot. And the FOMC has indicated from their previous 50 basis point increase that they're looking at further or continual 50 basis point increases into the subsequent meetings. What I'll actually put out to you guys here is that, are we likely to see the FOMC take on a even more aggressive stance, right? So market, everyone is anticipating that 50 basis point increase in the next few meetings. Is the FOMC likely to go towards 75 basis points? Will the rumor start on FOMC increasing rates by 75 basis points at the next meeting, just to be a bit more aggressive, just to stem down this CPI growth, or this number in terms of the inflation data? Something to think about. It's not been said yet, but it's something to consider. If we do start hearing comments or rumors or jawboning from FOMC members about a 75 basis point increase, then we're going to see massive anticipation and massive upside to that dollar strength, right? So that's something to think about that happened with last night's CPI data. Following on from that, today we do have, or early this morning, we did have President Biden speaking, and he actually came out and delivered some remarks. It did not move prices too much, but it just coincided with price moving at that time, with the cryptocurrencies crashing, with the S&P 500 crashing, well, almost crashing, right? It just coincided with that. And why the S&P and cryptocurrencies are crashing is really because of what's happening on the cryptocurrencies, and it's a bit correlated in that sense. But I'll tell you more about the cryptocurrencies tomorrow when we look at it on Friday. So with that, what else to look out for? We did have the Aussie and the Kiwi inflation expectation numbers come out, and it's dropped slightly, right? For the Aussie, it went from a 5.2 expected at 5%, but still very high, still above their targets. So we might still anticipate further actions from the RBA to stem down this inflation data. And New Zealand inflation expectations still at that 3.27, expected 3.29. So a small growth still expected there, right? So still expecting some form of actions from the RBA and possibly the RBNZ. But the focus for today is in the yen pairs. What else to pay attention to? Pound GDP numbers we spoke about yesterday. Tonight we do have the US PPI numbers, was 1.4, expected at 0.5%. Not likely to change prices too much. I think what we're seeing here is that for this week or for the next couple of days, not a lot of news to be released. And that's why we're going to see more of that trending scenarios right now, especially with what's happening in crypto and in the equities market. So you can see that for tomorrow as well, not a lot of news. Into next week, looking at the yen in focus again, nothing much yet for Monday, Tuesday. On Tuesday, we do have the US retail sales number. On Wednesday, we have CPI numbers year on year for the pound. I'll tell you more about that when we talk about it next week. Thursday, more Aussie employment numbers. And on Friday, again, nothing much. So you can see here that there's almost no news coming from the yen, from the Bank of Japan, and also no big news coming from the US. But we are looking at this as more of a likely to be a trending scenario. So with that, looking at the dollar index, yesterday when we spoke about this, I was looking at it and anticipating for it to break that 104 level with the news release, the CPI news release on the US data. What actually happened was that it spiked up and it shot back down again. Switch this to the H1 time frame just to get a better view. At 8 o'clock, at 8:30, when the news came out, it shot up, hit that 104 level, and then retraced back down towards 103.30, and then through the day slowly climbed back up, or through the night slowly climbed back up. Right now, again approaching that 104 level. So what to expect here at this 104 level or this 103.90 level? I would say wait for this candle to close. I still hold the analysis or the view that if the dollar index does go up and break above this 104, then we're going to see that further upside. Why is it pushing higher? One is because we had seen CPI data being higher or still increasing, right? Two is also because of what's been happening in the equities market, looking at the S&P 500 here on the H4. Yeah, the S&P 500 here, looking at the H4 time frame. Since yesterday, let's zoom in a bit. Since yesterday, or since the 9th and 10th, it has been dropping. It's broken that 4,000 level right now at 3,935. Anticipation is for it to continue dropping. Anticipation is for it to continue dropping, possibly back down towards, show an H on the daily time frame. Put a line in there just to show you. Possibly back down towards that 3,800 level. I think that would be a massive move if it does come down towards 3,800 or as low as 3,750, right? At that point, we could see some bounce here, as you see, towards the upside. So I think that we might see further downside, and if the S&P 500 does continue dropping lower, it has an inverse relationship with the dollar. It has an inverse relationship with the dollar. As S&P drops, we're going to see the dollar possibly pushing higher towards the upside. You can see that that upward move has also been the inverse of that downward move, right? So something to pay attention to. All the bad news in equities markets could be or could inversely result in a good news in the FX market, where the dollar gets stronger. We're going to see trends continue with dollar strength, could make trading a little bit easier in that sense. So look for the S&P 500 for that move. So coming back to the focus, what can we expect here on the US yen? US yen again had that big move last night from 129.86, went all the way up to 130.75 and came crashing back down again. There is some sort of a move towards reserve at this point, despite that dollar strength, right? Because equities markets are crashing, cryptocurrencies are crashing, FX markets, there could be that reserve, that move towards reserve. What this means is that I would stay away from the US yen at this point. I anticipate that we could see it come down towards that 129.30 level. It could come down towards 129.30 or as low as 129 before bouncing back up again. I would still only be looking for upside on the US yen, but at this point, I wouldn't be rushing into any trades. What you could be looking out for is, if you really wanted to get onto the US yen, will be buying opportunities as it comes down to test 129.30. If it bounces back up at about 129.45, above 129.45, you would have a 30-40 pips stop loss. First take profit at about 40 pips, a 1:1 risk reward ratio towards the upside, or ultimately a 1:4 risk reward ratio towards the upside, towards the 131 level. Right? So US yen has been, since the Bank of Japan came out with the big announcement, has been trading within the 131 and 129 level. I would say trade within that range. We had been speaking about breaking out of that 131 level, but I think it's going to cap at 131. So look for this range to trade within. You can see that it's been working quite well since the end of April. It's hit 131, came back down towards 129, bounced back up, and then now tracking lower again. So I'll say look for it to come down, test lower, bounce back up, then look for that buying opportunity towards the upside on the US yen. With that said, what else to look out for on the Euro yen? Euro yen is tracking lower, breaking that 137 level. And 137 is quite crucial. You can see that over the last couple of weeks, it's tested that 137 level, failed to break strongly and bounced back up. What I'm looking at now is similar to what happened in the 26th of April, where it broke lower and went down towards the 134 or 135 level. So what I would say for the Euro yen is to look for further downside. So a little bit different to the US yen is to look for further downside, especially below 136.30. Below 136.30, your stop loss here will be quite significant. You could do it at about 90 pips, but I would say keep it at about 40 pips stop loss, 100 pip take profit level. You're looking at a 1:2.7 risk reward ratio towards the downside, but it needs to come down below 136.30, close below that point before you get into that trade. Why I think the Euro yen is likely to drop further, it's also because of what we're seeing on the Euro dollar. it loads. Something's happening. Euro dollar's not loading. Why is it not loading? Okay, my euro dollar chart is not loading. Let me just check. Okay, so I'll come back to euro dollar while it's not loading. Let's see what happened there. Okay, so euro dollar here. Let's go back to that. When we spoke about the euro dollar on Tuesday, we were looking at it to move towards the down. We were looking for it to test higher and move towards the downside. It has been dropping. I think that with this downward move, with possibly that dollar strength coming into play, we could see the euro dollar test lower, possibly testing that 104.63 level. So because of that, then we're likely to see the euro yen, and because of that, we're likely to see the euro yen test lower below 136.30. We could see it come towards the 135 support level, right? So that was the euro yen. Then looking at pound yen has tracked lower. So it's pretty much front run the euro yen a little bit, giving you a bit of an example of what could happen. The pound yen has tracked lower. It's approaching that 158 level. And as it approaches that 158, I'll zoom out and show you that that big move towards 158 is a key support level, right? It's tested in Feb and rejected. Once it broke out of 158, it went quite high towards 160, 163, and as high as 168. So look for the pound yen for further downside, continuing that trend, continuing that downward move since the 22nd or the 20th of April, that downward move. Look for it to break below 158, a nice round number that if it breaks below 158, then look for that selling opportunity. And in this case, the next support is at 155 or 156. You can keep your stop loss very tight there. 60 pips stop loss, 156 pips take profit. A 1:2, almost 1:2.5 risk reward ratio towards the downside for the pound yen. Needs to break below 158, needs to break below and close below that 158 before we're going to see that significant downside. Why? The anticipation for the downside on the pound yen as well is, as usual, I'll check the pound dollar. You can see that pound dollar, despite what we're expecting yesterday, I don't think it's going to happen. It's not going to bounce. We've seen it break that 1.23 level, and now looks like it's tracking towards the 1.21 level. So if I zoom out on pound dollar, went out to the daily time frame, you can see that if it breaks below this 1.23 level, we're likely to see it come down towards the 1.21. So expecting that big drop in the pound dollar towards the 1.21, which could drag the pound yen down from 158 towards 155 or 156 support level. So quite different views. Dollar yen, we're looking at it to sit across and look for that bounce towards the upside. The euro yen and the pound yen, we're looking at it to track lower because of what the euro dollar and the pound dollar is doing. With all that, a lot of trading opportunities. Make sure you select your trades, trade well with proper risk management there. And lucky last, let's look at gold. With gold at this point, go to the H4 time frame. This is one of the reasons why I was saying that we're seeing some move towards reserve. Is because as gold had been dropping, right now it's bounced since last night. With all that volatility in the dollar, we've seen gold pushing back up. Gold at this point now, 1854. I think that we're going to see it consolidate, but so long as it stays above 1850, I think we're going to see further upside in gold, possibly towards that 1878 or 1880 level. So I'm looking at further upside on gold, but it needs to stay above 1850 as we see some capital move towards reserve. With all that said, if you have any traders clubs members, if you have any questions, put it into the club platform, put your trades up there. Let's do some analysis and trade ideas throughout the day. And with that, we'll see you tonight for Traders Club members. For everyone else, trade well, trade safe, and we'll see you again tomorrow for CAD and the cryptocurrencies. Bye bye now.